mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Pool Lock YouTube channel. I'm James Locke. Today we're going to answer some more Ask James questions of the day. And our first question is from Dennis, and he says, I'm thinking about investing in gold, silver, or crypto as an inflation hedge. What do you think? All right, Dennis, great question. We hear that a lot. How do we get an inflation hedge using metals and commodities? And my honest answer? None of the above. So crypto is a poor inflation hedge. It doesn't correlate with inflation at all. It behaves like a risk-on asset, moving with the stock market rather than against inflation. Bitcoin, for example, is down roughly 50% from its peak, even as inflation has continued rising. Proof it isn't functioning as a hedge. And nothing backs it. No industrial use, no inherent demand. It's speculative. Now, whether it becomes a legitimate cash alternative or a footnote in history, only time will tell. Now, gold was considered an inflation hedge decades ago, back when the dollar was pegged to gold, and the supply was finite. Now, that relationship broke down more than 50 years ago. Gold has some industrial use today, but it's still, largely speculative. Now, silver has more industrial use than gold, so it's arguably a slightly better hedge, but its recent swing to a record high and back down shows how volatile and unreliable it can be. The bigger issue with all three, none of them pay income. If you're retired or close to it, an income first, capital appreciation second approach matters. And gold, silver, and crypto pay no dividends. No interest, no cash flow at all. You're relying purely on price movement, which is a risky place to be. So if you want a, tongue-in-cheek true inflation hedge, it's a farm with livestock, produce, an oil well, and armed guards. In real hyperinflation, people need food, not gold, silver, or crypto. Important question about inflation hedges. And as always, if you'd like to send in your question, you can do so by emailing those questions to poollock@poollock.com. So we'll move right along to our second question. This is from Ben, and he wants to know, how do I know if I have enough of an inflation hedge built into my retirement plan? All right, good question from Ben, and a tough one, because none of us knows exactly what's coming. Now, people retiring in the 1960s had no idea how bad inflation would get in the 1970s. And none of us knows what's the next 10 to 20 years are going to hold. Still, there are two basic ways to build a hedge into your plan. The first is taking on good risk, staying more heavily invested in the stock market with an income first, capital appreciation second strategy. A 2 to 4% dividend yield may be enough for your needs, and dividends from healthy companies tend to grow over time, helping offset inflation. Now, if growth falls short, you can also sell shares during strong markets and shift gradually into bonds or higher income as needed. Now, the second approach suits more conservative investors, anyone who knows a 30% market drop would cause real panic. In that case, lean more on bonds and bond-like instruments to follow a simple rule of thumb. Spend only about 2/3 of your income. If you're earning 5%, roughly 3.25 to 3.5. If you're earning 6%, spend around 4%. Reinvest the rest so your portfolio keeps growing and keeps pace with inflation. Now, most people end up blending both approaches, dividend-paying stocks and income-producing bonds, for flexibility, stability, and growth potential. Now, the right mix depends as much on your temperament as your numbers. If market drops rattle you, lean conservative. If you're comfortable with volatility, lean more into the dividend stocks. Thanks for your awesome questions today. If you want to send in your question, love to have it, love to answer them. Email them to us at poollock@poollock.com. And if you like what you heard, go ahead and like and subscribe to our channel. I'm James Locke, your retirement income source. I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear.